Hello students, hope you are doing well and I welcome you in this day 3 of AAA Practice to Pass webinar for September 2022 session, which is being organized by ACCA, and I am your trainer Haris Sanif from Tabani's School of Accountancy, which is the Platinum ELP in Southern region of Pakistan. First of all, I would like to make sure whether my voice, screen, video is all clear. Am I audible? My voice, screen, video is all clear. Can you please, can you people please reply me in the question box that my voice, video, screen is all clear? Okay, that's great. Now, in the last class, which was yesterday, we were discussing about audit risk and we had completed question number 1 from the specimen exam, which is available in the ACCA website and in your practice platform. Now, we had completed question number 1 in which we had discussed 3 types of requirements: audit risk, procedures, and the ethical issues. We had discussed these requirements: ethics, procedures, and the audit risk, right? And question number 1 is very much important, and in the day 1 I had told you people that these are the requirements to be especially focused on. And since we had completed our important requirements, and many of the students, I'm receiving the request from the students that from your AAA WhatsApp group, it will also be shared shortly, the WhatsApp group. I hope you all are here in the WhatsApp group and you can talk to me, or you can even WhatsApp me, right? Now, this is day 3 and I will be covering in this day 3 the audit procedures and how to type the audit procedure. This is one of the important aspects. And similarly, we will be moving towards question 2 and question 3 types of question where we will be receiving that audit junior had performed the audit and you are now the audit manager and you are reviewing the things, right? So let's now proceed with this today's agenda, and that is the audit procedure. And in the last class I had guided you about the audit procedure. The well-structured answer is that you should write the procedure, source, and the purpose. Procedure, source, and the purpose, right? And I had told you about these things in the last class, and we had covered the example. And important point to notice for the procedure is that you need to think of the correct accounting treatment and you need to follow or chase that accounting, assuming that accounting had been properly done by the management. Because whenever you are asked that what procedures you should apply, so that means you should apply those procedures. You should apply those procedures which you are expecting to be the accounting which you are expecting from the side of the management. Let's say, for example, that management has completed the leases transaction, so you should follow the IFRS 16 criteria. Management had done research and development, and so you need to follow IS 38 criteria. Management had done inventory, so you should follow IS 2 criteria. The important point to remember is that while writing the procedures, you should think of the correct accounting treatment and you should chase that accounting treatment accordingly, right? You should chase that accounting treatment. And now, and simultaneously, just like that way, you should look at this example that company had disposed non-current asset. So reviewing the NCA register to confirm that disposed NCA is removed from the NCA register. So you should use the word review. It's review the NCA register, right? You should use the word review because you are inspecting that NCA register, right? You should use the word review. That NCA register to confirm that disposed NCA is removed from the NCA register. Now, this would be the correct accounting treatment from the side of the management, and you should cover that thing. I have extracted 3 examples. This is my WhatsApp number, by the way. And you can save it and you can WhatsApp me as well, or even you can join my WhatsApp group which I have created for this AAA Practice to Pass webinar. And the link of the WhatsApp group will be shared shortly in this question box. In which procedure, Mr. Jazir Tariq? In which procedure you are talking about? In the last one, this one? This one you are talking about? Janzir? Because it's not the thing which I have purchased. Listen that existence would be covered when you purchase the NCA. It is that NCA which has been disposed of. So exist, obviously it does not exist. So this is not the mean that you should need to visit and ensure it has been removed. Obviously it might be removed. You need to check the accounting treatment. And the accounting treatment, I just gave you one example. There may be many procedures with respect to these things. There would be many procedures with respect to these things, right? Now, step by step, we are moving ahead for the procedures. And remember that procedure is not only the substantive. In AAA exam, the procedures would cover test of controls and also cover substantive. It would cover test of control as well as substantive. Now the test of control, that means that you are supposed to test the controls of the organization, and substantive testing means that you are reviewing the financial statements whether they are in accordance with the applicable accounting standards or not. And in AAA exam, the question would be examined like that, where what are the procedures? In AAA exam, the question would be that what are the procedures? In paper AA, audit and assurance, it's being asked substantive procedures. But here in AAA exam, you are supposed to write the procedures which includes both TOC as well as substantive. So do not limit your procedure to that substantive testing. All the way you should place your important attention towards the substantive, but you should also use other things to verify, right? Now I have extracted a few examples from your past ACCA exams. Here it is mentioned that question I have extracted from Dali company. It's September-December 2015 requirement. First of all, you should read out the requirement very carefully, and remember that in AAA exam, the word substantive testing would not be used. The word principal audit procedures would be used. Like that way, you can see that design principal audit procedures to be used in respect of recognition and measurement of government grant. Now that means you are remembering IS 20 government grant. It's a principal audit procedure to be used in the recognition and measurement of government grant. I have extracted this particular information from the case study at the question Dali company September-December 2015, and now that extracted information will now be used in order to write the audit procedures in relation to the recognition and measurement of the government grant. Financial year end of the company is 31st December 20x5. Now with your learning and reading pace, just read this thing, please. Just read this thing, read this data, and then I will be explaining a little about IS 20, and then we will be moving towards writing the procedures. Please read it thoroughly. All right. Now, it quite may be possible that you have read this information, and now I am discussing IS 20 government grant first. And remember that my famous dialogue for audit substantive and the procedure is that think the accounting from your mind, the procedures will come out from your heart, right? So you need to think the accounting first. If you are successful in thinking the accounting, then it means that you are successful enough to write the audit procedures. This is IS 20 and this is the government grant. This is the government grant, right? And you all are aware very well that about the accounting standards. Yesterday, a student was asking about the process that how to revise the accounting standard. Now, that's a very simple thing that you pick up your official study text either of PPP or Kaplan, and at the last or at the specific end of the chapter, you will be finding the summarized accounting standard. Or even I also have the file of the accounting standards summarized. So I will be sharing that file in the WhatsApp group. So make sure that all of you are in the WhatsApp group. The link of the WhatsApp group would be shared shortly. Yes, the summarized accounting standards, I will be sharing that, right? Just wait a minute, please. The WhatsApp group link has been shared in your question box. You can join this WhatsApp group, and I will be sharing that summarized picture of IS and IFRS, and it really helpful. It's really helpful. Now this is the government grant, and you know that government grant means that government is paying the amount to the profitable or to something favorable business for the society. Let's say, for example, that if my organization is doing the activity which is beneficial for the society, so it might be possible that government will support me financial, and the government might providing me the financial assistance. So that is known as the government grant, and it is only for the favorable business. Now the government grant, there are two kinds. It can be split into two categories. Number one is conditional grant. Number one is the conditional grant, and number two is unconditional grant. Let's say, for example, that I am the company, I am Haris Sanif Limited, and I am going to start a favorable business in the deprived area or in the underpopulated area or in that area where literacy rate is low, and I'm going to open the educational institute, let's say, for example, and the government is coming to me of that state, and government is providing me the finance, and the government is saying that, Mr. Haris, this is the amount for your business without any condition. So if the government will impose no condition, that would be called as the unconditional grant. And the accounting, I'm not saying this is IS 20 says that it is your income. It is your income, and the double entry would be bank debit. Obviously, the amount will be receiving in the bank account, and your income would be credited. That means it is immediate recognition of income. It is the immediate recognition of income. And I am now going to break that suspense that how to write the procedure successfully in the exam. After 1-2 minutes after, I will be covering this thing. I'm not going to teach IS in detail. I'm giving you the summarized picture right now as far as this case study is concerned, right? An unconditional grant is that government will impose certain conditions. Government will impose certain conditions, right? And this amount will be spread, and this amount, remember, will be spread over the conditional period. This amount would be spread over the conditional period. And remember, this is my liability. And you know what? The double entry for such kind of the grant which is conditional, which is based on the condition, the double entry would be bank debit, and obviously the conditional period is normally more than 1 year. So obviously the government would be exercising the condition. Let's say, for example, the condition over 3 years. So as the time passes till now, initially it's not my income. Initially it should be recognized as the liability, and with the passage of time, when your conditions are being fulfilled, your conditions are met, then it will be transferred to your income. But initially it would be as bank debit, current liability credit, and non-current liability credit over the conditional period. Over the conditional period, right? Now, I am now giving the best tip to learn the substantive answers. This is a very simple and concise picture of audit procedures. No, not at all. It's a concise picture of accounting standard. Now, how to apply the procedure? How to apply the procedure successfully? Let me give you a very smart hint. If you want to write the procedure very successfully, you should think of the accounting, right? And you should keep in mind the correct accounting and try to follow that accounting standard. These are the procedures as well. For example, if there is the unconditional government grant, this is the unconditional. What is the accounting treatment? It is the double entry, bank debit income credit. Remember, bank debit income credit, these are two procedures. Number one, agree the amount received in the bank statement, because I received the amount from the government, and obviously government will credit in my bank account. So I will be writing the procedure, I will be verifying the debit side, and then I will be verifying the credit side. And on the debit side, there is a bank. So what procedure I will be writing? That review or inspect the bank statement for the month, whatever, and confirm the amount received against the government grant. That's it. Simple. Number two, if there is an unconditional grant, it is the income immediately. Immediately it is the income. Now, you would be inspecting the income records, and you should simply write, agree that amount as immediate income. And when this would be the thing, you should have in mind the accounting standard. And if you are able to think of the accounting standard, then simply follow these accounting standards with the starting thing, Cairo. Sometimes inspection, sometimes inquiry, sometimes inspection of document, asset, whatever. Now you will be writing these things, and at the end of your answer procedure, and you should end your answer with the stated line of the accounting standard. Simple. Now I'm going to apply these things which I had just told you, I will be applying that thing onto that example from the past exam papers of AAA, right? So I am assuming that you people had noted it down, but still I'm giving you the window of few seconds. Please note it down, just few seconds. Now I am going to read this case. I am now going to read this case and we'll be applying the audit procedures. See that financial year end of the company is 31st December 20X5. You probably might have read this information. I have extracted this from September, December 2015. In July 2015, the government grant of 10 million was received as part of the government scheme to subsidize the companies which will operate in deprived areas. Specifically, 2 million of the grant compensate for the wages and salaries incurred in the year to 31st December 20X5. The remaining grant relates to the continued operations in the deprived area, with a condition that the grant being that manufacturing site in that area will remain operational until July 20Y0. That means you can assume that after 5 years. Now 2 million, can you people tell me in the question box what is this 2 million? I'm not asking about the procedure, please leave it to me right now. I'm training you and you will be applying it later on. Can you people please come on to the question box, because I want to make this session interactive. What is this 2 million? Is it conditional or unconditional? I'm talking about this 2 million. It's totally unconditional. It's not conditional, it's unconditional. Because why? Because it is the amount which the government is giving me like that way. For example, I'm the government. I'm saying here is your 2 million, pay to your employees. Now I'm not making it mandatory. I have not imposed any kind of the condition, right? So what is this 2 million? What is this 2 million? It's the income. It's the income, right? Now, what is the procedure that in respect of recognition and measurement of government grant? It's the income. And what is this remaining grant, which is $8 million? Can you people tell me what is this 8 million? It's non-current liability and current liability, right? It's non-current and current liability. Do you agree on that, all of you? Okay, let's now start writing the procedure. Now this would be my answer, which I'm going to type here. I won't be typing my answer over here. Just wait a minute, please. I should ensure that coverage of each device. Now, what procedure I should write? First of all, what procedure I should write here? What procedure I should write? Listen that if there is any government grant, now think the government is giving you $10 million. It's not the amount which is immaterial. It is something which government is giving you. So obviously there would have been the written agreement between you and your government. So first of all, you should inspect. Now the point to be noted is that for the audit procedure, remember my words. For the audit procedure, just think from the inception of the activity. Just think from the start of the activity, from where the activity was started. Just follow in the serial orderly manner. Believe me, this is a very simple technique I'm going to tell you. What happened at the first? Did I receive the amount? Absolutely not. Did I make the double entry? Not at all. First of all, the government approached me, or I might have approached the government, and then government is ready to give me $10 million, and the government had made the contract with me, and then later on the next day, government has transferred $10 million into my bank account, right? So just think of the starting activity. Just think of the starting activity. I will be writing it here. Just think of the starting activity. For the procedure, you should start thinking from the start of the activity. So when you are able to think from the start of the activity, you will be able to think for the procedure. Now listen and imagine what had happened at the start. Either me or the government might have contacted each other. Government is ready to give me $10 million. So as an auditor, I am assuming that there would have been the contract or the agreement. So I would be inspecting inspect the agreement between the Dali company. Must write the name of the company, and the government. Must write the name of the company and the government related to the grant of $10 million, confirming. What you want to ensure when you will be reading the agreement between me and the government, you are supposed to make sure that amount, condition, uncondition, any kind of penalty or any kind of fine in case I'm not able to meet that condition by the government, right? So any repayment in case of the breach of grant condition. So this all the things, because the agreement sets the terms and conditions, so I should write it accordingly. So inspect the agreement between the Dali company and the government related to the grant of 10 million, confirming the amount, date of receiving. See that this is not the substandard, this is the audit procedure. You should start from the activity, accounting, activity, accounting. You should think like that. Date of receiving the amount, conditional and unconditional grants, any penalty or repayment in case of breach of grants condition, right? In case of grant condition, I should write it accordingly. Now moving next. What happened next? When the government had signed an agreement with me, the government on the next day, the government, now see that what was the information? The information that in 1st July, government grant was received in 1st July. So obviously you will be inspecting the bank statement of July 20x5. So what I will be writing that? agree the amount of grant $10 million received in the bank statement in the month of July 20x5. Now simple is that I had written down the procedure as well as the assertion. Now there are two ways to write. Number one, agree the amount which I had written it down. The next way is that, just listen it, no need to write. Inspect the bank statement of July 20x5. Inspect the bank statement for the month of July 20x5. Inspect the bank statement to verify the amount received. And I have written it down in a different manner, that agree the amount of $10 million received in the bank statement, right? So this was my yet another procedure. This was my yet another procedure. And what should be the next procedure? What should be the next procedure? Can you people come on to the chat box, I mean the question box, and write something? What should be the next procedure? I have written two procedures. Can anyone tell me? I am waiting. No. Okay, we will be. First, let's come on to the unconditional grant. Now, for the unconditional grant, what might be the case? For the unconditional grant, what might be the case? I'm writing. You can even simply put the heading or make the main procedure and writing the sub evidences, like for the unconditional grant amounted $2 million. I just make it that heading like that way. So, for the unconditional grant or amounted $2 million, you can simply write up the further sub points like that way, that this is the initial recognition as the revenue. So I'm writing that agree the amount recorded as income. So I had written down this thing. Now, for which purpose this amount was given? By the way, there is no specific condition, but I will be writing like that way. I will now be obtaining the payroll records. In order to ensure that this $2 million was spent onto the employees. So I will also be inspecting that this $2 million is now being used for distributing the wages and salaries, and I will be also inspecting the bank statement of the company. In order to make sure that the amount had been transferred to the employees. So this quite may be the reason. So you should first ask the management, or the more formal word is discuss with the management whether the amount had been spent on the employees for salaries and wages, and also inspect the, you should write this thing, and also review because when you will be asking to the management, the government, the management would surely be saying yes, and you need to rely on the oral evidence, not at all. You will be reviewing the evidences and also review the payroll records to agree that amount had spent on the employees salaries / wages. So this should be the procedure. Now, one more important procedure is that you can also review the bank statement of the company that these amounts had been credited to the employee's account, because it was simply mentioned that this 2 million grant compensates for the wages and salaries for the year ended 31st December 2025. All right, so this should be the case. This should be the case to verify this. Also review the bank statement of Darling Company and agree its amount and agree the amounts were paid to the staff against wages and salaries. You know what I am writing here? I'm not writing the audit procedure. Simple. Try to learn and try to catch my words. I am not writing the procedure. I am writing the accounting. And before accounting, I am writing the word inspect, review, and all stuff, right? So you can expect that you have written 1, 2, 3, 4 procedures, right? Now, this story for the unconditional grant had been completed. Now, for the conditional grant of 8 million, what you will be writing? For the conditional grant for 8 million, what you will be writing, and what should you write? Number 1, you should review the board of directors minutes of the meeting. That what are the plans for staying in that different area in the next 5 years. For example, that if I'm going to assert that I will be operating my operations in that particular area for the next 5 years, obviously there might be the physical movement of the activities. I might have carried out the strategy. So you should discuss and review the minutes of the board meeting about the strategy, about the planning, how to and what are the practical possibilities to stay for the next 5 years in that different area. Alright, so you should opt in. And one more important thing, the initial recognition of this should be split between current and the non-current liability. The initial recognition should be split between the current and non-current liability, right? So I'm going to write this for the conditional grant. Again, I will be writing the same words for the conditional grant. Obtain the schedule of liability to confirm that it is classified. Now, see, use the word classification. Confirm that it is classified as current liability and non-current liability over the conditional period of the next 5 years, right? Over the next 5 years. because it's the amount of 8 million. It's the amount of 8 million. And if you can simply divide 8 upon 5, so the amount would be coming. If you wish, if you want, you can quote this thing. But simply, you are writing procedure that obtain the schedule of liability, obtaining the schedule of liability, obtaining the schedule of liability to confirm it is classified as PL and NCL over the conditional period of the next 5 years. Right now, what should be the next procedure? What should be the next procedure? You know, the next procedure should be it's the initial recognition of that government grant. Now, the next procedure should be you should review or obtain or discuss with the management what are their plans, and in that case, you need to review their documentation and also ensure that their assumption to operate for the next 5 years are based on the rational reasons, I mean logical or sensible reasons. It should not be the fantasy, it should not be the hypothetical assumption that I woke up in the morning, yes, I will be staying in that area in the next 5 years. Not at all. You should have a complete detailed plan, right? So first of all, you should discuss with the management about their plans, and for any forecast to be operational in that different area, as this is the condition of the government, and ensure that assumptions of the management are based on the logical, or assumptions of the management are reasonable and practical. And you should also I'm now making it another point. You should also expect their planning and forecasting, right? So for the reasonableness test, review the management plans or any forecasting made, and in case of any calculations, like when the company is going to operate or start any project, it usually prepare the projected cash flow, it usually prepare the projected discount factor and the net present value. That's the beauty of the forecasting, and you can also simply recalculate it, right? In case of any calculation, recalculate it to verify the accuracy, like the forecasted cash flows or net present value workings over the period of 5 years, right? Now you should also physically visit. Now, for example, that I'm saying that there is the construction program and the apartment is going to be constructed. Right? So you will be practically physically visiting over there in order to make sure you will be physically visiting there in order to make sure that there are practical actions for the 10 floors apartment, for example, right? So you should physically visit that different area. So I can write like that way, and remember that when you are writing the procedure, you should use your present tense, that do this, present tense, right? Present tense. So I'm writing it physically visit. Now do not need to write the word inspect. You are not going to inspect the area. When you are visiting somewhere, you should use the word visit. So physically visit the site in that different area and observe the arrangements over there to determine whether the site will be operational for the next 5 years. Now, one more important thing. Listen, students, one more important thing which I'm now going to tell it. For every accounting standard, there is that disclosure. For every accounting standard, there is that disclosure. You must have to inspect and read the notes to the accounts in order to ensure that disclosures are completely made in accordance with IS 20 requirement. So you should write the wording like, review the adequacy of disclosures in the notes. Review the adequacy of disclosures in the notes related to the government grant of $10 million, including the explanation of $2 million and $8 million, and ensure, this is the case relation, right? And ensure that disclosures are in line with IS 20. This is simply the way to write the procedure. Now, one more important thing. I'm now going to write the procedure, and that is the written representation. You people might be aware of the fact that what is actually the written representation. See that written representation is the statement taken from the management. Written representation is not the evidence. Remember my words. Written representation is not the evidence. Written representation is actually the supporting evidence. Written representation is actually the supporting evidence. It is not the evidence, it supports other evidences. It supports other evidences. Now, what should be the written representation is that when there is any significant matter, when there is a significant matter, like you are purchasing the subsidiary, you are selling the subsidiary, you are closing one of the division and making the employees redundant. So IS 37 provision, you are making the judgmental figures, and when there are subsequent events going concern, when there are the evaluation of financial statements for the uncorrected business statements, each and everything, all these things which are very significant, you should obtain the written representation from the management. Okay, now what is the written representation? It is not the evidence. When you have collected the evidence, it is the supporting thing that you type that thing. That, for example, me, Haris Ali, the group CEO, let's say, and I'm saying that you will be writing that thing on my letterhead, and you will be typing, I, Haris Ali, the group group's chief executive officer, is acknowledging that the above blah blah evidences provided to the auditor. So that's the acknowledgement from the side of the management, and the document will be printed out, and I will be signing this thing and giving to you, and you will be filing it in your working paper file. So written representation is not the evidence itself, it is the thing which supports other evidences. So at the end, I will be writing that obtain the written representation from the management. Obtain the written representation from the management, confirming the above evidences. Not at all. You should not write these things. Confirming the above evidences. No, I will be marking it as a big cross. I will be marking this thing as a cross. No, you should not write these things like that way. You should write the evidences obtained above. The summary of the evidences. What is the summary? That 10 million was received. It is classified as CL and NCL, right? It is classified as CL and NCL, and acknowledging from the side of the management that company will remain operational for the next 5 years. The above evidences make it a summary in one or two lines. Now that's your capability. So if you will be writing like that way, obtaining the written representation from the management confirming above evidences, this is not the quality answer. This is not the quality answer. The quality answer is that obtain the written representation from the management. Confirming. What do you want to confirm? For confirming the receiving of $10 million grant from the government. Okay, comma, confirming, that is I do endorse, I do confirm, confirming that $2 million that accounted for as income and remaining amount is spread over the 5 years conditional periods as CL and NCL, and company would remain operational for the next 5 years. Now that's my answer. Now you can see the difference between this line and this line. I have seen some of the students like that way, writing like this, like this way. So this is not something professionally addressed procedure. The professionally addressed procedure is like that way, right? So I had written it down, and you people are all in my WhatsApp group. When you will be joining that WhatsApp group, in the description of the WhatsApp group there is a Google Drive link, and in that link I am updating the notes, and these annotated notes which I am writing in, I will also be updating in that Google Drive link, which you will be finding in the WhatsApp group description, right? So to date I have not uploaded the annotated files. I will be uploading it either today or tomorrow, because I was waiting to complete this document, this specific document, and then I will be uploading it together. So these are the things, right? So you can find your marking scheme from the official answer by ACCA, by the examiner. Right now I'm just going to facilitate you how to draft the answer. So you can find the marking scheme from that from the official answer. Now let's move ahead for another case. This is yet another case study, and I have extracted 2020 from March 2020, that is counted as a recent exam. Question extracted from the question with group March 2020 required. Design the principal audit procedure which you will instruct the component auditor. Now, who is the component auditor? First of all, let me give you the brief and concise summary of the component auditor. That who are you? Let's say, for example, there is the group. There is the group, right? And there is a group audit, and it is covered by ISA 600. There is the group auditor. There is a group auditor. I'm right now writing in the structured manner of the company, that is group of companies. There would be the head office, and there would be subsidiary number 1, there would be subsidiary number 2, there would be subsidiary number 3, let's say, and this head office is in UK, United Kingdom, and this subsidiary is in, let's say for example, it is in UAE, let's say for example, and you are the group auditor. It quite may be possible that subsidiary might have different audit firm, different auditor, and you are the group auditor. You are group auditor. Now, group audit, and this auditor is known as the component auditor. This is the component auditor, and these three are known as the components. It is not necessary that you are auditing the entire group. It's not necessary that you are auditing the entire group. So it's not necessary that you are auditing the entire group. It quite may be possible that auditor of this subsidiary would be the different audit firm, and that is known as the component auditor. Sorry for this thing. Now, you are the group auditor, and you may get the information from the component auditor. You may ask the component auditor to perform certain procedures. You can ask the component auditor for any kind of information, right? So ISA 600 further goes on to say that some factors to be considered before relying on the component auditor. Now that will be something out of the scope right now as far as this requirement is concerned. So design the principal audit procedure which you will instruct the component auditor to perform on the sale of property to the group chief executive officer. Now these are for 6 marks, and you should write at least. The marking scheme is that one student was asking about the marking scheme. The marking scheme is that one procedure, 1 mark, one procedure, 1 mark, right? Now read this thing from your active attention. And so first tell me, by reading this thing, which accounting standard is actually applicable in this case. Accounting standard, not the audit standard, the accounting standard. Read this question and tell me the accounting standard. Which accounting standard is being applied over here? Yes, you guys are absolutely right. Accounting standard that's being applied in this case is IS 24. That is the related party transaction. And coincidentally, we had covered that question number 1, where I had discussed about the related party transaction, that the related party is something who can control the organization, who has got the veto power in the decision making process, or jointly control organization. Yesterday I had told you about the related party, right? Now, what is the related party requirement? That transaction, the nature, the relationship, the outstanding balance should be completely disclosed. Now, if I can make this thing summarized like in the accounting way, but first of all, for that thing I need to read the case. The company had sold the small and unused building to the group CEO, and the amount is still outstanding for the payment $50,000. The group CEO is planning to use this property as a holiday home. It's a question from Rick Group, March 2020. I have extracted that portion. So the point to be noted is that whatever the CEO will be doing with that property. But the point is that this is the transaction. This is the transaction with the group CEO. Now, whenever there is a related party transaction, IS 24, whenever there is a RP transaction, that is related party, so obviously there is a board meeting. There is the board meeting, right? There is a board meeting. The property is being sold. Now the transfer of ownership to CEO, the amount is outstanding. So don't worry about the amount. It is material. If not by amount, then by nature it is material, right? Then by nature it is material. So the amount is $50,000. That is still outstanding. So what do you think? Should it be classified as the receivable? Please tell me in the question box. Should it be recorded as the receivable? Can you please confirm me? Should it? Yes, it should be accounted for as the receivable. It is a receivable, right? You should think of the accounting treatment. So simple as that. So if the asset has been transferred to the owner, so that means this property should have been removed from NCA register. What would be the double entry for that? Receivable debit, property credit, right? The entry would be that receivable debit and property credit. This would be the double entry, and this is the double entry. This will give you double mark, right? Receivable and the property should be removed from the NCA register. It should be removed from the NCA register, right? At the date of disposal. And according to IS 24, audible? Am I audible? Excuse me. Am I audible? Is my voice and screen is clear? All right. Okay. All right, students. Now, what should be the what I was talking about? Yes, nature of transaction. It's the nature of transaction which should be verified. relationship, any outstanding balance, name of related party, right? So you should write this thing. Now, profit and loss is not the okay. I'm taking the questions right now. Do we need to verify the profit or loss on the disposal? It might be possible. You can verify this. You can verify this profit or loss on the disposal. You can verify this. But first of all, you need to verify the fair value of the property, right? Now, I'm just giving you 1, 2, or you can say 2, 3 minutes window. This is the accounting treatment. You have noted it down. I will appreciate that you should write this thing or click a picture. Click a picture would be better. Now, I'm giving you a window. Please write at least. Please write procedures. I'm not giving you the quantity of procedures. Please write the procedures. I am giving you 2, 3 minutes that you should write the procedures, and when I will be typing, just compare it with my procedures, right? Please write the procedures. Assuming that you all are writing the procedure. All right. Okay, I'm seeing the chat box. Okay, Saiful Asgar, you are saying, sir, can you please show the slide discussions? Okay, okay. The last slide probably you are talking about. Rest of you students, please write a few procedures. This is the slide you were talking about, Saiful, right? Okay, you can note it down. Okay, you're welcome. Now I'm seeing the improvement in many of the students who are struggling to write the procedure, because I am receiving the sound procedures which are acceptable. That's good. Okay, now I am now giving you the answer. I'm now giving you the answer, and I'm going to type the answer as I typed in the last in the previous question. Okay, now now this is the thing. I'm going to type the answer. Regarding the related party disclosure. Now we are typing our answer here. Here I'm going to write my answer. First of all, what I gave you the clue to write the procedure. The clue to write the procedure is that you should think of the correct accounting. You should think from that activity. Just start from the activity. When there is a related party transaction, the company had sold the property. The company had sold the property to the CEO, to the group CEO, and that means there might be the decision taken by the board. So you should first review the minutes. You should review the minutes of BOD meeting. Then the start of the question is that the company had disposed unused the group CEO, right? Okay. So first of all, there might be the minutes of BOD meetings. That is, review the minutes of meetings of board of directors. Okay, review the minutes of meetings of board of directors, confirming the board decision, because it's not the decision at the management level, it is the decision which is taken at the board level, right? Confirming the decision by BOD to sell the property to the group CEO at the amount $50,000, right? To sell the property to the group CEO at the amount $50,000. I had reviewed the minutes of BOD meetings, right? Second point, whenever there is a property transaction, remember that whenever there is a property transaction, whenever there is a sale or purchase transaction, Firstly, it is the sale deed, or you can say the legal documentation. The legal documentation, the contract between the purchaser and the seller, which determines the amount and the terms and condition. You can also inspect the agreement or any legal documentation. You can also inspect the legal documentation confirming the amount and the transaction, the sale of the property. So you should review. You should also review the sales purchase agreement between the RIC group and the group CEO to sell the property at the amount to sell the property at $50,000, and also confirm the date of transferring the property. You know, when the property will be transferred to the group CEO, when the property will be transferred from the group to the group CEO, it should be removed from your NCA register. It should be removed from the NCA register, right? It should be removed from the NCA register. And one thing is that, okay, I'll write it later on. I will be writing that obtain the NCA register to confirm that property is removed. Property is removed. To confirm that property is removed from the records from the date when it was transferred to the group CEO, right? From the date when it was transferred to the group CEO. Next point is that it is now credited. You should also inspect the receivable amount. You should also inspect the receivable to make sure that it is the outstanding amount, and it is appearing as the receivable, right? It is appearing as the receivable. So I will be reviewing, that is, review the current assets to confirm that $50,000 is accounted for as a receivable in the group financial statements. And one important thing, the selling price is $50,000. It quite may be possible that carrying amount is $45,000. For example, let's say the carrying amount is $45,000, and I am selling this property to the group CEO amounted $50,000, and that means there is a $5,000 gain on disposal. Similarly, it may be the loss. So I will be agreeing, I will be inspecting and agreeing. I will be obtaining the non-current assets, the property's carrying amount, and comparing with the disposal amount, and make sure that any profit or loss is calculated and recognized properly in the statement of profit and loss. So I will be first agree the carrying amount of property from the NCA register, and recalculate the gain/loss on disposal by comparing with $50,000. By gain on loss on disposal by comparing with $50,000, you can also recalculate it and ensure it is recognized as other income in the profit and loss. You can write this thing 1 2 3 4 1 2 3 4 5. I had written down 5 things. Now remember, this transaction is not usual. When something is of high level transaction or unusual transaction, you must obtain the written representation. But the related party transaction, the IS strongly focuses on the disclosure note. So I will be writing for the disclosure note as well. I have to review that disposals, transactions, outstanding balance is completely disclosed in accordance with IS 24 requirement. And I will be also be obtaining the written representation. And one important thing I will be explaining it later on. I will be review the adequacy of the disclosures. Review the adequacy of the disclosures in the notes related to the complete disclosures related to the nature of transaction, name and relation of the related party, that is group CEO, and the outstanding balance. In accordance with IS 24. In accordance with IS 24. So I had written it down. The related to the disclosure note, right? Now I will be obtaining. Now one important thing is that you are exercising the procedure, you are applying the procedure. So you can also confirm the market rate of similar kind of the property to confirm the reasonableness of the transaction. One important thing is that with the related party, the issue is that there may be the fraudulent transaction. For example, that such kind of property, the measurement according to the square yards or whatever, such kind of property is available in the market at $80,000. And considering the relationship with the group CEO, I am selling this property to the group CEO at $50,000. And it might be possible that transaction may not be in the arm's length transaction based on the market analysis. So you can also verify the rates from the market of the similar kind of the property to confirm the reasonableness of the transaction, right? So you can even conduct a market survey. So you will be obtaining the estimate of the fair value, right? So you will be conduct the market survey to determine the sales price of the similar kind of property in the market and ensuring that fair value of the property is reasonably estimated. And now you can also insert IFRS 13. Yes, you can simply insert that fair value is in accordance with IFRS 13 fair value. Ensuring that fair value of the property is reasonably estimated and in line with IFRS 13. IFRS 13, right? So you can write this thing. Now I will be obtaining the written representation from the management confirming that this is the fair value. Management is confirming that this is outstanding balance and this is correctly and appropriately disclosed. This is correctly and appropriately disclosed in the notes to the accounts, right? So I will be obtaining the written representation. So obtain the written representation from the management. Obtain the written representation from the management. You can obtain the written representation from the management confirming that property was sold to the group CEO at $50,000 and the amount is fairly estimated in line with IFRS 13 and is outstanding and completely disclosed in accordance with IS 24. Right? 1, 2, 3, 4, 5, 6, 7, 8. I had noted down 8 procedures, and these are enough. Now, this is the way to write the substantive procedures, or you can say the audit procedure. One important thing I have to note it down that these are the procedures. You should think of the activity right from the inception, right from the start. Okay, the start of the activity, related accounting standard, and activity accounting standard, and accordingly you will be able to write the audit procedures, right? So this is the simple thing. Now I need the response from all of you that whether you understand such kind of the procedure, how to write it. Please give me your honest review. That's just for the purpose of feedback simply. Is there any kind of improvement while writing the procedures? Is there any improvement? Please reply in the question box. All right. Now we are taking a short break so that we will be continue with this this procedure, and then we will be going to the question number 2 kind of things. Let's discuss it after the break, right? So I'm taking a short break. It is 10 o'clock according to my time zone, and we will be resuming at 10:20 p.m. right? Resuming at 10:20 p.m. It's 15 to 20 minutes break, right? Please do not go away. I'm just turning off my camera and turning off my mic, but the screen is open. Students, we are now back from the break, and I would like to ensure that my voice screen video is all clear. Can you people please confirm in the question box that my voice screen video is all clear? Am I audible? My video, my screen? I need to confirm it once again. Can you please confirm me? All right. Now I'm quickly coming towards the next answer here. So, all right. Now this is the answer which is already written here. Now let's come on to the next question. Excuse me. It's for 6 marks. Design the principal audit procedure to be used in the audit of goodwill arising on the acquisition of Links company. Management calculation of goodwill is shown in the exhibit. You do not need to consider the procedure related to impairment testing. Remember one thing, when you purchase the subsidiary, then there is a goodwill, and the goodwill is also impaired. The goodwill is also impaired. You need to carry out the impairment testing. But the question is expressly saying that you do not need to consider the procedures related to the impairment testing or to the foreign currency retranslation. This will be planned later in this audit. It's for 6 marks. And see that this question is extracted from the Eagle Group question. From the question Eagle Group September 2018 exam, past exam paper of ACCA. First of all, the financial year end is 30th September 20X5. This is the last exercise for procedures. Then we will be turning towards the another topic after this question, right? So let's start with this question. Let's start with this question. And what's written here, the cost of capital of the company is 10%, interest rate is 18%. Now, exhibit number 4. It was question number one, and I had extracted this specific question related to the procedures. Related to the procedures, I have extracted it down. Now, determination of the goodwill on the acquisition of Links company. Links company is obviously a subsidiary. So it's a cash consideration paid on 1st December 20X4. The year end is 30th September X5. And this is the contingent consideration, note number 1. We will be reading this note number 1. And contingent consideration is that present value of the future cash. It's 271, right? It's a total consideration. The fair value of non-current asset, it's a fair value. It's 49 million. It's a non-controlling interest, and the fair value of non-controlling interest is determined as whatever the NCI percentage into market share price less fair value of identifiable net assets, and this is the goodwill. And IS 36 says that regardless of any indicator of the impairment, the goodwill should be carried out for the impairment test. But here we are not supposed to write the procedure on the impairment test, because the question is expressingly saying that you are not supposed to write the procedure. So this is note number 1, note number 2, and note number 3. Note number 1, I'm stating that the contingent consideration will be payable 4 years after the acquisition date, and it's calculated based on the payment of 525 million, only payable if Links company reaches the revenue and profit targets. The document included in the goodwill calculation has been discounted to present using a discount factor 18% interest rate. Now something this is something shocking for us. This is something shocking for us because it's 18%, it's the interest rate, since the cost of capital is given, and when we are calculating the present value, we take the cost of capital. Why this company is taking that interest? I will have to discuss it with the management whether there is any rational reason. So I will have to discuss it accordingly with the management. This would be my procedure. Number 2, non-controlling. The non-controlling interest is measured at fair value, the amount being based on Link's share price on 1st December. See that this information is given by the management, and obviously I will not be relying on the management. I will have to verify. The rule of audit is that don't trust. The rule of audit is that don't trust, verify. Whatever the information I'm giving to you, whatever the information I am giving to you, you should not suppose to accept that information. You have to verify it. Don't trust, verify. This is the rule of the audit simply. So you will have to take, you will have to obtain the records of the stock market share price to confirm that it was the fair value at the date of the acquisition. Number 3, the asset and liabilities acquired at their fair values were determined by an independent firm, and this is known as the due diligence activity. This is known as the due diligence activity. Prior to the acquisition due diligence, a fair value uplift 12 million was made in relation to property, plant and equipment, who was engaged by the group to perform the due diligence, right? So I will have to write these procedures. I will have to write these procedures over here. But first of all, I would like to give you a very short summary that it's a fair value of NCI percentage of shares multiplied by market share price. Market share price, that is fair value of NCI, and this market share price is at the date of acquisition, and you should look at the stock market. You should look at the stock market share price rates, right? At the date of acquisition, it was 1st December 20x4. It was 1st December 20x4. You need to look at the market share price, and obviously you have to discuss many things. There was a due diligence. There was a due diligence, and you should review their reports. You should review their reports. You should discuss with the management. You should recheck that there is a fair value uplift, share value uplift. And one more important thing, that you are not purchasing a grocery, you are purchasing a subsidiary, right? So there would be the agreement. There would be the agreement with Links company, and the agreement is showing your holding percentage. It is showing the amount. It is showing the deferred consideration or the contingent consideration. So we will have to review all these things, right? Now let's quickly come on to the procedure. Let's quickly come on to the procedure, and listen to me very carefully. Listen to me very carefully. What I have taught you, I've taught you that take from the starting point of the activity, that what is the activity? You are purchasing the subsidiary. Obviously there might be the agreement between the Eagle Group and the Links company. Listen it very carefully, because I will be giving you 2, 3, 4 minutes window to type or write by yourself, and then I will be writing, and you should compare your answer with mine. First of all, there might be the agreement between the Eagle Group and the Links company. So you should review the agreement between the Eagle Group and the Links company, which will be confirming the holding percentage and sale percentage, the amount and all that stuff. And then 80 million is the cash consideration paid. You are auditing the group financial statements, so you will be inspecting the bank statement or the cash book to confirm 80 million amount paid. And for the contingent consideration, you will have to discuss with the management why they have taken 18% as a discount factor, despite of the fact that 10% cost of capital is available, and why didn't they took that thing, whether there is any rational reason, and you should make sure that their reason is justifiable. If not, then there is a matter of the judgment, and it is known as the judgmental misstatement. So you should request the management to take 10% as the discount factor, right? Then moving next, you will have to confirm the fair value of NCI. You will have to determine the fair value of NCI. You will have to determine the fair value of identifiable net assets. you should review the due diligence report, and you should recalculate the entire goodwill. It is IFRS 3 business combination. IFRS 3 business combination. And remember, whenever there is a word, you should use IFRS 13 as well. That fair value is in line with IFRS 13. Recalculate, review the disclosure, and all your 6 procedures can be written down with a very thorough attention. You should write it down. Now, please write procedures. Please write the procedures. I am waiting few minutes. Please write the procedures. One more important thing is that I always say to my student in my regular class, whether it is physical class or online class, that must try to write it by yourself. See, when you are studying in the lectures, and if teacher will solve hundreds of questions, let's say for example, so you will be saying, yes sir, you are right, but your learning will be tested out when you will write by yourself. Don't think that you are writing correct or wrong. Don't think that. No need to think that. Just write it down. If your certain procedure or answer is not appropriate or it is not good, so then there is a learning gap, and learn from your mistakes. And this is the right time to learn from the mistakes rather than doing the mistake in the real exam, right? So do not think whether your procedure would be right or wrong. Okay, be mature, write few procedures, and when I will be writing, you will have to compare it and use your analytical analysis skills whether your procedures are right or wrong. Now my lecture is finished. Please write this. Then I will be explaining it. Hurry up, please write this. One student had written that challenge the management understanding reason behind the 18% discount. Please do not write such kind of words. Challenge. You are not supposed to challenge. You are write the procedure. Procedure. Without mentioning the name of the student, one student had written, to some extent, it is inappropriate starting point, not challenge. You should write the word, I am reading the procedure, challenge the management to understand the reason behind using 18% discount rate. No, you should discuss with the management whether there any rational reason. Don't use the word challenge. Yes, Jazib, you have written right. Few of the students are writing well. I'm reading your procedures. My teaching procedure, my teaching methodology is that you should simply think of the activity start, from where the activity is actually starting. What is the correct accounting treatment? You have to chase that correct accounting treatment, right? You have to chase that correct accounting. So simple. No, without mentioning the name of the student, I'm reading the procedure. Review the consolidated financial statements to verify that Turing's company is correctly consolidated or not. What is correctly? This is a very big statement. Check the financial statements that this is correctly recorded. What is correctly recorded? No need to mention such kind of words. You need to explain the correct accounting treatment. You need to explain the correct accounting treatment. But what is correct? One student had written that recalculate the goodwill to confirm its accuracy in line with IFRS 3. Accuracy is simply the assertion. It has nothing to do with the accounting standard. Now your trying time is over. I'm now going to write these procedures, right? I'm now going to write these procedures. What I had taught you, what I had taught you, I had taught you that you people should write like that way. You people should write like that way. You are following the activity start and the related accounting, right? First of all, you should read out the sale purchase agreement of Eagle Group with the Links company. Write down the name of the company and the group, right? So I will be reviewing them. First of all, review the minutes of BOD meeting to confirm the authorization of. It is basically 80% purchases. It's not actually mentioned here in the extracted information. I am making it simple for you. It's 80% and 20% NCI. 80% holding, right? It's 80% holding. So remember this thing. So first of all, I will be writing that review the minutes of BOD meeting to confirm the authorization of 80% holding in Links company and also obtain the sales purchase agreement to confirm the 80% equity interest, amount of cash consideration, amount of cash consideration the conditions of the contingent consideration, right? These are actually verifying rights and obligations, amounts, and the date of purchasing the links company. Now this is the smart and complete procedure. Next you should write that the amount of 80 million, I guess, was paid. The amount of 80 million, right? Was it the amount of 80 million? Okay, yes, it was 80 million. Now see, follow the pattern of this goodwill calculation. This 80 million was paid in cash. There's a cash consideration, but obviously it would be paid like a check or the bank. So on 1st December, write down the date. Okay, write down the date. Write down the date as well. So I'm not going to write it here. Agree the amount of $80 million paid against the acquisition. Write it complete, against the acquisition of 80% holding in the links company. 80% holding in the links company. Agree the amount paid against the acquisition of 80% holding in the links company in the bank statement of 1st December 20x4. Now this is the case connection. Now for the 271 million, which is the contingent consideration, I will have to discuss with the management. About the rationale of using the 18% interest rate to discount the contingent consideration, despite of the fact that 10% cost of capital is available. Evaluate the assumptions for the reasonableness test, right? Now that's very simple thing. I have written on 3 procedures. Now moving next, there is the fair value of NCI. There is a fair value of NCI. And how the fair value of NCI was determined, I have told you that in that question, that fair value was calculated as market share price at the date of acquisition multiplied by 20% NCI. I am giving you that information. Would you believe me or not? No, don't believe. Or the rule of audit is that don't believe, don't trust, just verify. So verify the fair value of NCI by simply obtaining the 20% shares and multiply with the share price at the date of acquisition by simply multiply with the 20% shares and multiply with the share price at the date of acquisition. At the date of acquisition, full stop. Obtain the share price from the stock market rates. Obtain the share price from the stock market rates, right? from the historical stock market rates. 1, 2, 3, 4. I had written down 4 procedures. Now I will have to inspect the due diligence report because that fair value was determined by the due diligence expert, and in order to determine that that fair value was actually from the side of due diligence, I will have to confirm it. All right. So review the report of due diligence to confirm the reasonableness of the fair value of links net assets and confirm its reasonableness by ensuring that fair value is in line with IFRS 13. Now the question is expressly saying that no need to apply the procedures on the impairment, and so I will simply recalculate the entire goodwill calculations to verify the mathematical accuracy of figures 1, 2, 3, 4, 5, 6. And at the last but not the least, I will be writing that ensure that complete disclosures of goodwill in accordance with IFRS 3 business combination. So review the adequacy of disclosures in the notes related to the goodwill in accordance with IFRS 3 business combination. So that is the thing. I have noted 1, 2, 3, 4, 5, 6, 7 procedures. And so you are able to drop the procedures, right? Now I'm now going to change my screen, change my window, change my file so that we will be able to understand the different nature of the question. So this was, I guess, enough for the procedures practice. You can even inspect the shareholder register, Mr. Science Siddiqui. You can inspect. You can inspect. Yes, Jazib, you can write whatever you have written. You can write like that as well. So let me open one document, and this document is already attached here as well. Now this is the comment on the matters. You are in the review stage right now, and you are manager. You are audit manager, right? And this is question 2 and question 3 kind. And your audit junior had already conducted the audit. Your now see that I am changing the style of the question. All right. So please think accordingly. Now you are in the completion and the review stage, and your audit junior had completed the entire audit, and you are in the review stage, and you need to comment on the matters. You need to comment on the matters. Then the exam focus requirement is that comment on the matters. And what evidences will you expect? It will be combined together like that way. This is the example. You can simply read out the requirement. It's written that comment on the matters to be considered, comment on the matters to be considered, and explain what evidence you would expect in your audit working paper file. So comment on the matters and explain the evidence. This is the requirement examined together. So while writing the comment on the matters, see that you are writing the comment on the matters. So here you have to write what matter. Please note down that roughing cell, it's too much important. Matter plus correct treatment plus management's treatment, and two possibilities would be there. If management treatment is if correct, then it's okay. If not correct, then explain the impact on the financial statements. Then write down the impact on the financial statements with X percentage of materiality. All right. And along with this, you need to write a little ROMM, your little response, I mean procedures. This is actually the combination of various writing things. Your comment on the matters should cover these contents. Your comment on the matters should cover at least these contents so that you will be able to write it correctly. It's management treatment. That is management had already done and you are required to evaluate. Now here, your evaluation skills is too much important. And by writing any kind of evaluation thing, you need to write that what should have happened, what has happened, and whatever happened, what is the impact, and that is the thing. I'm just giving you few seconds window if you want to write or if you want to quit it, you can. Now that's totally up to you. That's the comment on the matters, and the answer content should cover at least these things. Right, now moving next. Now here, this is the evidence is expected. This is one of the important area, that what evidence will you expect? What evidence? You are again in the review stage and your junior had brought the evidences. You are required to write the evidences expected in your working paper file. Now see that what is the difference between procedure and the evidence? What is the difference between procedure and what is the difference between evidence? Procedure and evidence. Remember that evidence is actually the end result. It is the end result. It is the end result. Okay, evaluation means a Janish mystery. Evaluation means, okay, I'm explaining it. Evaluation once again. It means what should have happened, what had happened, whatever happened, what is the impact, plus the recommendations. These all the things I have noted it down like that way. So simply this is the evaluation simply. All right, Janish, can you please respond me? Okay, now evidence, what is the difference between procedure and evidence? Evidence is actually the end result. I'm giving you the example. If I need to write the procedure that inspects the BOD minutes of meeting to confirm the disposal of subsidiary. Now this is the procedure. what evidence, while writing the evidence, see that while writing the evidence, you should write, assume that I am your junior and you are at the upper level of the audit firm in the hierarchy, you are at the upper level, and I am your junior. I have carried out this procedure. I have carried out this procedure. When I was on the field means that is an audit field. When I was on the audit field, what procedure I had applied? Inspect the BOD minutes, and I had inspected that BOD meeting minutes. I made a photocopy because original document is belongs to the company. Original document belongs to the company. I will be taking it as a photocopy and I will be attaching in the working paper file. And what evidence will you expect from me? You will expect that Mr. Haris Sanif will be bringing the copy of the BOD meeting minutes, because this is the original copy which I have inspected already, and you are expecting that copy. You are expecting the evidence, that is the copy of the minutes of BOD meetings. It's written here to confirm, but here I will be writing it's confirming, ing. That means that is showing something. So copy of the minutes of BOD meetings confirming the BOD authorization of disposal of subsidiary, right? One more example, then I will be coming to the question, right? So this is the difference between procedure and the evidence. Procedure is actually the active tense. It is your active tense and it is thinking of the past. That is the end result. What is the end result? And procedure is to be applied for the future. Now, one more example. One more example is that discuss with the management. Discuss with the management about the rationale of booking XXX provision to ensure the assumptions are reliable. The assumptions are reliable. Now see that this thing was the active thing. When I was the audit junior, I was having a discussion with the management. See that, observe my body language as well. Observe my body language. I am the junior and right now I am doing the substantive. There is a management. I am discussing with the management. So management, why have you discussed this thing? Why have you estimating this procedure? I am having a discussion with the management. So I am the junior. I am having a discussion with the management in front of me and I am noting his discussion. I am asking Mr. Finance Director, what is the reason of booking this provision and what is this thing? And that Finance Director is actually telling me his assumption, and I'm simultaneously noting it down, and I'm bringing for your relevance, and I am noticing his discussion on my notes, and I will be attaching in the working paper file. Now, what evidence will you expect from me? That is notes. That is the notes on the notes of the discussion held with the management. Notes of that discussion held with the management, showing ing. You should use the word ing. This is actually the This is actually the showing, that's the evidence. And remember that evidence is the very important weightage for AAA paper. Notes of the discussion and the management showing the valid assumptions related to the provision book, whatever, blah, blah. So this is actually the starting point of the evidence, right? Now, when I will be doing that thing, applying this thing onto the example, onto the question, so you will be in a position to better understand, right? So right now, let's move on to this thing. The example, the year end of the company is 31st December 2020 and PBT is 6 million and revenue is 56 million. An explosion, this is the thing you will be studying right now. I'm reading the requirement. Comment on the matters to be considered and explain what evidence you would expect, right? So I will have to type this answer, but first with your own pace, please read this question and tell me which accounting standard is being applied over here. No, not at all. I will be typing this thing. Not at all. No verbally explanation. Please read it and tell me which accounting standard is being applied over here. Please point out the correct IS, please. Now see that identifying the wrong accounting standard is the basic mistake you people are doing. Is the basic mistake you people are doing. No, it's not IS 8. It's not. Not at all. No, no, no. See that. Even if you know how to draft the answer, but picking up the correct accounting standard is your one of the weak point. Nabil Sharif, you have identified the correct accounting standard, that is IS 10. It's not a game of IS 38 or IS 36 or IS 37. It's a game of IS 10. It's a game of IS 10, right? Yes. Now I will be reading it out. An explosion occurred at the smallest of the four offsite locations on January 2021. That is after the year end. That is after the year end. And this is the event. I'm just turning off my mic and camera just for 1 minute to fix one issue. Now, my voice and video is all clear, I'm assuming. Is my video is clear? My voice is clear. I hope so. All right. All right, students. I guess I should turn off my camera. All right. Now, I am assuming that my voice and video is all clear. I have actually changed the setting of the camera. Is it now fine? Students, please confirm me. Please confirm me. Is it now fine? Is it now fine? Please hurry up. We have some limited time right now. Okay, that's great. That's pretty much fine. Okay, now students, this resulted in some damage to the inventory and property, plant and equipment. Company's manager have investigated the cause of explosion. Management of the company has estimated that value of damaged inventory, property, plant and equipment was 0.9 million and it has now no scrap value. Insurance claim had been contacted to recover the amount, but no response from the company had been received. From the insurance company, there is no response at all. The company had made no adjustments in the financial statements nor any disclosures made. The amount expected to be recovered from the insurance company and had been recorded as the receivable. There are a lot of issues in this question. There are a lot of issues in this question. There are a lot of issues. Please download this file. Please download this file. This is a very important issue. Is that it's a matter of IS10. Can you people please tell me in the question box whether it is an adjusting event or non-adjusting event? Can you people please confirm me whether it is the adjusting or non-adjusting event? Is it the adjusting or non-adjusting event? Is it the adjusting or non? It's a non-adjusting event. It's completely non-adjusting event, right? It's non-adjusting event because IS10 says that. Now that's why I need to explain the IS first. I need to explain the IS first, and then I will be. Let's discuss that. See, that explosion is a kind of an accident. It's IS10. Number one is the adjusting event. Number one is the adjusting event, and number two is the non-adjusting event. See that everything is the non-adjusting event if there is no indication. Explosion, flood, earthquake, any kind of a natural disaster, any kind of the accident is the non-adjusting event. Since it is not, there is no hint at year end of explosion. It is simply the accident. So it's a non-adjusting event. And for the non-adjusting event, there should be disclosure. There should be the disclosure. and see that in this question it is expressly written that the company had made no disclosure and no adjustments. The amount and one more important thing, IS 37 is also being touched here. IS 37 is also being touched here, and it says that when that there is a chance which is virtually certain, then you should record assets. And see that company had estimated that 0.7 million would be recovered from the insurance, and they had simply recorded as the receivable. They had simply recorded as the receivable. That is the big misstatement they are making. It's 0.7 which they are making that the misstatement, right? This is the, and can you people calculate the materiality of 0.7? That 0.7 divided by 0.7 divided by, with respect to PBT, 6 million. It's material, right? It's material misstatement that they are making. So they have booked the assets. They have booked assets, and so it's material misstatement, and your receivable is overstated, right? And they have made not they are not making any disclosure. Non-disclosure is the misstatement that is leading to the incomplete notes. That is leading to the incomplete notes. So one more important thing is that it is saying that occurred at the smallest of 4 offsite storage location, resulted in damage to the inventory and property, plant and equipment. See that damage to the inventory and property, plant and equipment. Now here IS1 is also being touched, because your damage is to the inventory, damage is to the property, plant and equipment, and there is a risk of going concern. See that in this specific single question, three kinds of ISs are being touched, right? So you need to write all these things. That's the risk of going concern as well. And risk of going concern, it should be disclosed. There is a risk of non-disclosure. There is a risk of non-disclosure, right? So you will have to explain, you have to comment all these things, but the question is expressly showing that they have conducted a misstatement in 2 areas. They are violating IS 37 requirement, and they are not even disclosing based on IS 10, right? And so this is the thing. So you will have to explain IS 10, IS 37 and all these things. So you can just click it, and I'm now going to comment on this matter. And what evidence will you expect? That is a separate story. That is a separate story. All right, that's a separate story. So let's now come on to the commenting on the matters. I hope that you have noted it down, or at least click the picture. Okay, now let's move on to this thing. I'm writing here comments. Comments. So what are the comments? You will be writing what are the comments. It's simply giving up the heading comments. That is, there is the explosion after the reporting year, that is on January 2021. All right, and this falls under the scope of IS 10, according to which an event is said to be, you have to comment on 360-degree angle. An event is said to be an event is said to be adjusting if there is any indication of that event at the reporting year end, and if there is no hint at the reporting year end, then the event is non-adjusting, and so there is no hint of the explosion since it is the accident and non-adjusting event. And the reporting year is actually the 30th December 2020. And there should be the complete disclosure, of the event in the notes to the accounts of 2020 financial statements. Now you should write complete what disclosures you are supposed to make in the financial statements, and disclosure should cover the nature of explosion, the loss of $0.9 million, because there was a loss of 0.9 million, since it is what is the percentage? 0.9 divided by 6 million. I guess it was 6 million, right? Yes, 6 million profit before tax, and it is 15%. See that it is 15% of PBT. In the bracket, you should write 0.9 million divided by 6 million, and so material to the financial statements. But the company had not made any disclosure with respect to this, and so non-disclosure is a misstatement. Non-disclosure is the misstatement. Non-disclosure is the misstatement, and users might not be informed with respect to this matter, since it is the significant matter because of the damage to the NCA and some inventory. There is the impact on the going concern as well. Since there is the explosion, and so disclosure should also be made regarding to the going concern doubts, if any. And so what is the comment? And remember that your audit report, title, addressee, opinion, basis, you know the audit report, right? Title, addressee, opinion, and basis. and after that basis paragraph there would be the highlighting paragraph to highlight the going concern doubt, and so that audit report should cover this going concern doubt by inserting the going concern paragraph after the basis for opinion paragraph. After the basis paragraph. Anyways, this needs to be checked because it is not mentioned here whether they had included the going concern doubt. Anyways, I'm writing one thing, there is a slight risk. If there is no disclosure of the going concern doubt, then again it would be counted as material misstatement, since it is the matter of the going concern, right? Since it is the matter of going concern. One more important point is that furthermore IAS 37 is also being applied here, because IAS 37 says that you should recognize the asset when it is virtually certain. In addition, the insurance company had been contacted. Right? And since there is no reply, there is no response from the insurance company, and it is hard to believe whether the insurance company will settle on the amount. All right. In addition, the insurance company had been contacted, but there is no response from them. If I can refer to the question that the amount expected to the insurance company has been recorded as a receivable, but there is no response from the account from the insurance company. There is no response from the insurance company, right? So you will be writing, but there is no response from them, and it is not appropriate to say whether the amount is likely to be recovered, as according to IAS 37, if the chances of inflow is virtually certain, then assets should be recorded, and the recorded receivable of $0.7 million is not confirmed, and so assets are overstated, and this is 0.7 million. 0.7 million divided by 6 multiplied by 100, and this is 11.7% of PBT and hence material. All right, so we have commented, these are the comments on the matters. These are the comments on the matters, right? Now do tell me in the question box. Do tell me in the question box, do you understand how to write the comment on the matters? Excuse me, please be active in the question box, please. You need to, now I'm giving you one assignment for tomorrow. You need to write the evidence expected. I have taught you the evidences expected. Okay, so you need to write, you need to take it as an assignment and come up tomorrow, because tomorrow is the last day of the webinar series, and I will be telling you the evidences as well. Since I have taught you how to write the evidence, you have the file, you have downloaded file, you can simply write down what evidence will you expect in your working paper file, and I will be resuming this from here tomorrow with another question practice, right? So till there,